one is a whole, the internet of value, and the other is a store of value. But people compare these things, but nobody compares them. That's stupid. 2022 is a more complex year, so I can't assign as high a probability to it. My perspective is, in a world riddled with debt and overwhelmed by debt, if you raise prices on people, they will consume less. So my view is the opposite of everybody else's view currently. My view is that growth slows dramatically, because most people see what's in front of their eyes and not what lies into the future. So you need to look at the kind of probabilistic trees of, okay, what could happen? There are no certainties. None of us know, but where do the probabilities align themselves? Most people look with inflation up now, therefore inflation, therefore wages will go up, and therefore the Fed needs to tighten. That's the general how the market tends to think. The macro game is all about living in the future and looking backwards at the probabilities to say, what is the most likely outcome from here? And is there opportunity to invest accordingly? The best backdrop to crypto would be further economic weakness, the marginal propensity for the balance sheets of the central banks to increase. That would be positive crypto and would certainly extend the cycle further than people imagine. And that's potentially on offer here. So why did I have that projection of Bitcoin? It wasn't an emotional projection. It's like, okay, Bitcoin is following very similar past patterns to 2013, 2017. So we have a contextualized understanding. We can put it within the logarithmic trend and it would extrapolate being about one standard deviation overbought at around those levels, and that would be correct with the trend. We also know that it's trading probably below Metcalfe's law fair market value right now. And we also have observed in the past that the last quarter tends to be quite strong, in fact, very strong. So the balance of probabilities are that you're going to have a good run. Is that a certainty? Far from it. Does that make me want to increase my position? Well, I've been increasing it ongoing anyway, so it didn't change my framework. My framework is not about the end of the year, what price it hits. Yeah, and I don't shy away from it because I'm in the prediction business, because I'm an investor. You've got to have a mental framework. What people need to understand is asking me for a snapshot in time is not my prediction that I'm actually investing on, because what everybody forgets to do on Twitter is ask, what is your time horizon? Does it matter that it goes to 200,000 by end of year or not? Because that's not my time horizon. My time horizon is, I'm thinking of this space over the next 5 years. Where does it go? Are there markers on the way? I think that if they understand two things, the adoption of the technology and therefore what that implies in market cap, this space, let's say by the end of the decade, that leads you to a core principle of, much like I did when I took the bet at 200 in Bitcoin, is probably a lot higher than here. Now, it's not certain, but the odds are pretty damn high. Unless that network effect stops, which we're not seeing any evidence of, the best thing to do is just to shut your eyes. Now, if you are having sleepless nights, then your position is too big. So I think so I asked the question, so the question you should ask is, why didn't your prediction come true? I've also noted that the market has a tendency for maximum pain, which I've talked about in another podcast. And maximum pain is, we all believe one thing, then the opposite is likely to happen. And I step back and look at it and think, who is the marginal driver of this market right now? It is not retail. Why not? The wallet addresses, new wallet addresses and stuff are below highs now. And I think it's to do with this consumption issue. You've raised prices on retail in terms of fuel, energy, fixed costs. So their marginal ability to invest has gone down as well as to consume. So you've taken marginal money out of the market. So if you've taken them out a bit, and then the institutions are at the year end and they're incentivized differently, again, they're not saying they don't believe in the market, they're saying, I believe in getting paid, and so I want to protect my profits. I get it. It created a lopsided market. Now the question is are they done? It looks like they're done because the market has been kind of just chopping around since last week, which was the traditional last week of everybody squaring their books. Could it have another leg lower potentially? Could that come out of Asia, which is where a lot of the selling has also come from? Again, possibly, but the probability is that next year ends up being a strong start just because capital gets put to work. What we don't understand is the time horizon of those people. So maybe they're very short term. They're making lots of profits, and then whoever gets caught when the music stops, they all get washed out, but there's a bunch of people who still make profits from doing it. Asia is more speculative in nature, there's a gambling culture that's pretty strong. So there is more speculation that happens there. They also, in many of those countries coming from a poorer base, and the leverage in crypto actually works quite well like options because you don't get open-ended risk, you get stopped out. Yes, you get the spike, so you get the spike risk, unlike the option where you just lose the premium. But it actually is not a bad way of taking risk for people. I just don't know what their time horizons are. So my guess is a lot of them are pretty short term. So, maybe they're in and out, using a lot of leverage to juice the return. And then, yes, periodically a bunch of them will get caught and get washed out. I don't know whether that net they've made money or not. My guess is they probably have. You can manipulate the market in the short term, you can't do it in the long term. So I'm not a short-term player. I hear people talking about what the whales are doing and what people are doing in Asia, what some of the, the bigger trading people in Asia are doing. And sure, humans are incentivized to manipulate markets, but in my time horizon, it doesn't matter. I think all markets are manipulated in the short term in some way, shape or form. Crypto just happens to have this 24-hour, but not 24-hour liquidity. So that creates a opportunity set for people who want to move the market around for specific things. I know this from the derivative market. You would see if there was a option was expiring at one point, people would try and expire it at that point to make it worthless or valuable, whatever it was doing. Same with program trades where you'd buy huge baskets for a pension fund. They would guarantee a price into the close and they would manipulate the price. We've seen it in LIBOR, we've seen it in the foreign exchange fixings, we've seen it in everything. If there's an economic incentive to do it, humans will take it. It's actually not all in Ethereum. It's about 80% Ethereum. There's 95% in crypto because I've also got a position in carbon, which is the only other non-crypto trade I've got. But the other layer ones, it's really simple to me. I don't know why everybody gets in a big mess about this. Really simple. Bitcoin is the least flexible in its current format. If you want flexibility of smart contracts and ease of use, you go to Ethereum. That's great. Now, if you want cheaper fees or faster, you go to another layer one. Solana, Terra, Avalanche, etc. And they all have their place in the ecosystem, and that's fine. And it's not, I don't think the market is all about price. It's all about network effects. Those chains are getting network effects. And I think Ethereum's dominance of the alternatives market, the non-Bitcoin market, will fall over time because the market's going to broaden out and find different use cases. It's like I was having an argument on Twitter last night about decentralization, but it's not decentralized enough for them. Nothing is compared to Bitcoin, but people will take trade-offs. Everybody does. Life is about a trade-off. And the trade-off is less decentralized equals faster and cheaper. And that equation is what it is, and you make your choice. And that means there will be people adopting some of these ecosystems.
Do you see Ethereum flipping the Bitcoin's market cap?
Yeah, for sure, because one is a hold the internet of value, and the other is a store of value, right? They're not the same thing. The value of all of the mobile phone networks in the world is worth a lot more than gold, but nobody compares them. That's stupid. But people compare these things. Now, if in 10 years' time, Bitcoin has smart contracts, has cheap transactions, all of these things that Ethereum offers, then fine, that may change again. I don't think of it necessarily as a permanent flippening. Maybe something else happened. I have a completely open mind. But right now, if you look at the network effects and the speed of growth of the network, Ethereum will outperform. And eventually, it only has to outperform by 2x and it's done. And it's larger. Does that mean that Ethereum's won? No, they're two different things. It's ridiculous. I think what is going on right now is the battle for who has control over this space. If you're a regulator with a hammer, everything looks like a nail. So the CFTC, the SEC, the OCC, the Fed, everybody wants a say in this thing, right? Because it's power. Why? Well, because they kind of know it's big. That's interesting. So Gensler is trying to sound like he's the tough guy to get people on his side, saying, look, I'll take control of this, because a lot of these guys are boomers and they don't understand what this is all about. So he's saying, don't worry about it. I've got this. So he's trying to get power himself. But, I think the US is learning about the power of the number of crypto holders and how passionate they are about the space and how much money they have. And so I think there's a game changer to come from this. I think they will, as I said, they'll be forced to understand that this is not a 1934 securities law. What does the 1934 securities law actually do? It actually forces you to use an intermediary because you're not smart enough to go directly. That's basically the whole thing. Yep. You're not smart enough to take risk. Unless you've got $1 million, then take all the risk you want. You can go to a casino, you can buy a gun, but you can't invest in a startup. No. Why? Because it forces people into intermediaries, which is why the banks and the asset managers don't want change. But the behavior that is observable, if you see a group of people who fear change and change is coming, there will be others who will drive it. So disruption, you cannot put the genie back in the bottle. So my guess is there's 20 asset management firms around the world thinking, fuck it, how do we change everything? And that's happening everywhere. The music industry, the film industry, the media business, the insurance industry, the banking industry, everything. There's somebody thinking, fuck it, let's change it all.